Coming up on Market to Market, Texas ranchers drive their herds north in search of grazing land and feedlots. Market to Market unveils a new educational resource for agricultural instructors. And we'll learn how a baseball park built in a cornfield 25 years ago continues to draw fans.
Hey, is this heaven? No. It's Iowa.
Those stories and market analysis from Dan Hueber next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. This is the Friday, October 10 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. A good investment on Wall Street this week may have been a healthy dose of Dramamine. After opening just below 17,000, on Tuesday, the Dow Jones Industrials lost nearly 270 points. One day later, the Dow rallied right back with a gain of more than 275. Thursday, the Bellwether Index plunged 335 points, and the roller coaster pulled into the station Friday when the Dow shed another 115 points, capping a weekly loss of more than 530 points, which effectively wiped out all of this year's gains. Commodities also were volatile. Crude oil slipped below $86 per barrel for the first time in nearly 2 years, and cattle prices pulled back modestly from their record run. Sky-high cattle prices are supported by the drought in the South. And the Texas Panhandle, which historically enjoys the nation's highest concentration of feeders, continues to experience declining numbers as ranchers and feedlots drive the cattle north.
Recent rains in Texas have helped replenish soil moisture in parts of the nation's top cattle-producing state. But most of North Texas remains locked in a persistent drought that began nearly 4 years ago. And ranchers in the arid region know they need a lot of rain before water levels and livestock numbers return to normal.
And we just didn't get any rain. I mean, we like 5 and 6 inches in a year. and then last year, we got our average of 19 inches, but it didn't fall in any of the growing season. So we were just forced to, either sell the cow herd, ruin the country, or go somewhere.
Minnie Lou Bradley, who has ranched near Memphis, Texas since 1955, has seen her share of dry spells. But she says the current drought might have been the end of the Bradley 3 ranch. Instead, Bradley moved 75% of the 400-head operation west to an irrigated field. Rains finally arrived in her area this spring and improved conditions enough for the ponds to hold water and the cattle to graze on green grass for the first time in 4 years. But the damage to the cattle industry in Texas will not be repaired quickly. The Lone Star State herd has dwindled to about 4 million head, down about 13% from its pre-drought size. With pasture and grazing land in poor condition, many ranchers sold cows. As a result, fewer calves were born on Texas ranches, and most feedlots that struggled through the drought are operating way below capacity. In normal conditions, Nolan County Feeders outside Roscoe, Texas, feeds 10,000 to 12,000 head. Today, however, the operation is only feeding 2,000. It's not only difficult to find calves to feed, but some areas are having trouble getting grain as the rails are occupied moving a glut of domestically produced oil from Texas and points beyond. While the state's largest feedlots still boast more cattle than those of other states, the herd is slowly moving north. In 2011, Texas fed about 900,000 more cattle for slaughter than Nebraska, but by this past summer, the gap had narrowed by 30% to roughly 300,000.
Yeah, you may have seen some of these cattle move from drought-stricken areas to northern areas that weren't as struck by drought. But I think for the most part, unfortunately, from a supply standpoint, they went into the beef chain at that time, and now we're seeing the consequences of being short on supply now because we're not producing as many calves.
Major League Baseball begins its version of the Final Four this weekend. Kansas City is the Cinderella story this season, and the Royals will face the Baltimore Orioles to determine the American League team in the Fall Classic. The National League Championship features the San Francisco Giants and the St. Louis Cardinals, who between the two of them have won 3 of the last 4 World Series titles. The infamous Black Sox, however, are out of the picture this season, as they have been since 1919. And shoeless Joe Jackson is nowhere to be found, yet anything but forgotten in Iowa. Jackson, whose legacy was tarnished in a cheating scandal nearly a century ago, was the inspiration for a popular Hollywood movie shot in 1989. 25 years later, thousands of fans still make the pilgrimage to the Field of Dreams each year to celebrate the values of baseball and the virtues of relationships. Laurel Bauer-Bergmeyer explains.
Hey! Is this heaven? No. It's Iowa.
25 years ago, the movie Field of Dreams lit up the big screen. But when the film premiered in 1989, little did people know the kind of attention it would attract.
Field of Dreams is one of the most iconic baseball movies, but more than that, it's probably one of the most iconic films of its generation. You know, some films are critically acclaimed, and it was nominated for an Academy Award as Best Picture that year. But then there are also films that just kind of continue to resonate. They stay with people. And if you are someone who gets it, and this is one of these films, either you get it or you don't, but millions of people really got it, it's one that kind of stays with you.
Field of Dreams seems to resonate with people near and far, and fans come from all corners of the world to visit the location. Last July, thousands gathered at the site to celebrate its 25th anniversary. And there's just something about this ball diamond chiseled out of a cornfield that draws people to the tiny town of Dyersville, Iowa.
I have great feelings about Iowa. My band has written a couple songs that invoke the name Iowa. So it's marked me. It's a part of my history. And I think this movie, the movie we made, Field of Dreams, 25 years later, it still gathers people from around the world to come be at this simple little field. And we again celebrate that 25 years after the fact.
In the film, Costner's character, Ray Kinsella, plows his corn under to build, of all things, a baseball diamond. Kinsella's motivation to destroy his share of Iowa's dominant cash crop was rooted in the prophecy, if you build it, he will come.
If you build it, he will come. If you build it.
The movie transcends baseball by highlighting a son's simple desire to reunite with his late father, an emotion experienced by millions of people every year.
This was a film about redemption. It was a film about the unspoken word, how communication between fathers and sons and mothers and daughters can occur not just with the written word, but also in terms of just having a catch, or just in terms of their body language and their eye contact. So I think it's a film that really covers a lot of ground, and it really comes back to what Terrence Mann said in the movie about baseball is where you can go back when things aren't really going well in your life or in the world. Baseball kind of brings things back to normal. And I think that's why the American public is so enthralled with this movie, is because it kind of brings things back to normal, and we can think about what's good about our country and about ourselves and about our relationships.
The one constant through all the years, Ray, has been baseball. America has rolled by like an army of steamrollers. It's been erased like a blackboard, rebuilt and erased again. But baseball has marked the time. This field, this game, is a part of our past, Ray. It reminds us of all that once was good, and it could be again.
The 25th anniversary celebration included a baseball game by the Ghost Players, a group of former professional and semi-professional athletes, including some who appeared in the movie.
I was an extra, so most of the time I was just standing around or I was sitting down or else, but I was lucky enough that I was pitching at that time when Tim Busfield drives down the lane, and he doesn't really get to see us yet and there else, and he's so nervous that I'm going to hit him. And then, well, Don Buford was in charge of us, and he'd come out and he says, well, I said, be more normal if Hank would say, look out. So I did. And all of a sudden, next morning, I was on the Screen Actors Guild. So that was kind of neat.
When Universal Studios filmed Field of Dreams during the summer of 1988, the movie was shot almost exclusively in Iowa. While drought that year wreaked havoc on the production, the Field of Dreams became an iconic shrine for fans of the film. And Iowa took on special meaning for those involved in the production.
Iowa is Iowa, and it's irreplaceable. I mean, there's no place else like it. I mean, there's something very unusual about the just honest ethic of being involved with people here. It's real. It's like I said, the handshake deal. It's like people just open their hearts and open their doors to you. They respect you. There's a great thing about good old-fashioned American respect that exists right here in Iowa. It's a very, very true thing.
I grew up on a farm in Ohio, so being in Iowa just felt like home to me. I mean, the rolling hills, and I mean, just so beautiful. I mean, those of you who live here know, and those of us who have visited here know. So it just felt like home to me, and the people are so nice and so, supportive. Everywhere we go, there'd be people, well, what can I get for you? Can I do something for you? And it's been by far the most rewarding experience I've had in film.
I got a little knot in my stomach when I came around the corner and I saw it. I lived here with a different mind and what it means to people now and how people come and travel and make pilgrimages here and what they experience within their families especially, and how this film has resonated within families and affected so many men and so many women that realize that it affected the husband and the man, and seeing daughters and that have lost their father come and want to feel him here. This movie does that really beautifully.
Maintained as a tourist attraction since the filming of the movie, the Field of Dreams was recently sold. But the developers' plans for the iconic site are dividing some of the community's landowners. Go the Distance Baseball plans to build a $70 million 24-field mega sports complex on the 193-acre farm. In opposition, there is a Save the Field of Dreams initiative on Facebook, a coalition of neighboring farmers known as the Residential and Agricultural Advisory Committee. It sued the city of Dyersville, alleging that its rezoning of the Field of Dreams from agricultural to commercial ground is illegal. The case awaits a judge's ruling.
You want to have a catch?
I'd like that.
Regardless of the outcome, 2014 will be remembered as a celebration of the movie Field of Dreams. Its pastoral location and the impact both have had on hundreds of thousands of fans over the past 25 years. For Market to Market, I'm Laurel Bauer-Bergmeyer.
Next, the Market to Market Report.
And our traditional analysis segment is coming up in a moment. But before we get to the markets, we want to draw your attention to a new educational resource Market to Market is offering to agricultural instructors, students, and viewers.
Market to Market Classroom connects teachers and students to stories about the science, technology, and business of agriculture from America's longest-running agribusiness television program.
Hello, I'm Mike Pearson.
The Market to Market Classroom website features learning modules that build upon core subject content, emphasizing critical thinking, research, and communication skills. You'll also find curriculum resources, challenge questions, and timely videos to help students gain a deeper understanding of the issues and challenges confronting agriculture in the 21st century. So we encourage teachers, students, and anyone else who wants to learn more about the business of farming, the impact of science and technology, and even the basics of commodity trading to visit iptv.org/market-to-market and click on Classroom to access this free online resource.
The Agriculture Department released its latest estimates on supply and demand Friday. And with record corn production basically a foregone conclusion, USDA increased its new crop domestic stocks-to-use ratio for corn 0.5 point to 15.2%. The numbers were more bearish in wheat country, where the new crop domestic stocks-to-use ratio is projected at 30.5%. For the week, December wheat gained 13 cents, while the nearby corn contract moved nearly 11 cents higher. U.S. soybean production also is expected to soar to an all-time high this fall, and USDA pegs the global new crop stocks-to-use ratio at nearly 32%. That pushed prices lower Friday, but not enough to wipe out gains in previous sessions, as the November contract gained more than a dime. Nearby meal prices followed suit with an upward move of $12.20. In the softs, cotton posted a modest rally this week as the December contract advanced by $1.63 per hundredweight. In the dairy market, October Class 3 milk lost 17 cents, while the deferred contract improved by a nickel. Over in livestock, the bulls took a breather this week as the December cattle contract lost 57 cents. Nearby feeders declined by $1.77, and the lean hog contract gained $1.38. In the financials, the euro gained 10 basis points against the dollar. Crude oil continued its free fall as the November contract settled with a weekly loss of nearly $4 per barrel. COMEX gold advanced by almost $30 per ounce, and the Goldman Sachs Commodity Index lost more than 10 points to settle at 554.80. Here now to lend us his insight on these and other trends is one of our regular market analysts, Dan Hueber. Dan, welcome back.
Thanks very much for having me.
Well, let's jump into this report today. Let's talk about the wheat market first. Were the numbers surprising to the trade at all in the wheat side?
You know, actually on the domestic side, at least, the carryout numbers were reduced from last month. And granted, as far as usage, we're not seeing great improvements there. But regardless, a lot of people were anticipating we'd have a carryout number above 700 million bushels. It was actually dropped down to 650 in a fraction. So, a step in the right direction, really. And it's, the wheat market to a large extent has its supply news behind it. What we need to do now is, of course, uncover demand, and that's been the difficult aspect with Russia, the Black Sea market being so underpriced compared to us. But even there in Russia, the domestically wheat prices have been climbing. So evidently they have got to market the quantities they want to. Farmers are maybe sitting a little bit tight, particularly with the ruble dropping to record lows. So that could ultimately start directing a little demand back to domestic.
Now, do we anticipate this wheat price up 12 cents on the week to kind of continue this, I don't even want to call it a rally, but past the report on Monday?
We did see about a nice 10% rally in the wheat market over the last 10 days or so. I guess I tend to think it's going to be more of a sideways pattern. Maybe not going into lower lows, but probably go back down, revisit the low side of where we traded here 2-3 weeks ago. When you look at commodity markets, on like a peak, where you have this big spike and we drop away. When you bottom, you tend to just kind of drag it out. You bore everybody to death. You move sideways for months at a time. And I think that's probably the stage we're at in the wheat now. We can start moving a little more sideways, but we still are going to have to uncover some demand if we're going to try to move us off these lows.
And as we look at the demand picture, where out there is there an opportunity for demand on the wheat side globally?
Well, one of the problems with the world production this year, Russia had just a phenomenal crop. In fact, that was one of the possible negative you could read between the lines on the report is they did not change, the USDA did not increase the Russian production, left it at 59 million metric tons. A lot of the world thinks it's probably closer to 61 million metric tons, and in good quality wheat. Outside of that, the wheat in Europe was very off quality, mostly a feed grain. So same thing in Brazil. Brazil is having a real difficult time getting their wheat harvested right now. Southern Brazil has had excessive moisture. So you have a lot of quality issues where domestically, at least, our wheat is of good quality. So for food grain quality, we're probably the best place once you get past the point where people are ready to start paying a little premium for that.
Certainly,
so, yeah.
But USA has the supply.
Exactly.
That's nice.
Exactly.
Well, let's jump into the corn market. Looking at the report today, nothing terribly shocking. Numbers came in a little bit better than the trade was anticipating from the producers'
Slightly
perspective.
lower, and one of the big changes, of course, they did drop harvested acreage, 700,000 acres. There's been a lot of debate about this ever since the FSA released their latest data. Even then, they said this data is incomplete. They've given the county offices until the end of December to actually bring things up to date. There's been this kind of raging debate, well, how much are we going to lose on the corn acreage? Some people think over 2 million acres, or have been projecting it could be as many as 2 million acres. Well, trimming at 700,000 acres really kind of puts that story behind us. And rightfully so, the trade, whatever we saw in this report, they're automatically going to assume, well, November is going to be higher on yield. They did boost the yield up to 147.1, I believe. The trade was looking for 0.6 higher, so not a significant difference, but I think looking into November, they're going to expect that to be higher again. So it's maybe a temporary relief, but it's still you really can't spin this to where it's a positive number overall. So.
And was that the indication when the report read it? Corn soon sold off nearly a dime. They're begun to anticipate that large November number.
Absolutely, and really nothing. They know we've got 80% of the harvest in front of us yet, so no sense on rushing to try to take ownership of this market just yet. So.
Advice to producers sitting there looking at a lot of unpriced corn maybe this season?
I think one of the real challenges you have in the corn market is there's a tremendous amount of carry. So, when you look at, you've got a 30-cent premium to July corn. There's a lot of reasoning that, as each month moves past, we're going to erode that carry in the market. So $3.50 July corn, may never be better than $3.50 corn. In fact, if December corn is at $3.25, if we don't see really any kind of an uptick in the demand, we don't see any tightness in availability of corn, those back months will tend to come down to where the spot bottomed out. So that still paints kind of a negative picture on if somebody's holding corn unpriced. Our recommendation has been just sell the carry, take advantage of it. And, if we move out 30 days from now, we see the market stabilized, we can always come back with a call option or something if we want to try to take advantage of rallies. But boy, right now, take advantage of the premium they're offering at you and go ahead and put a price on it.
All right. Well, let's jump over into soybeans. We've got a question here from a former farm boy in central Iowa. As farmers are getting into harvest, we heard a lot of talk about sudden death syndrome early in the year, and his question is, how much has SDS lowered bean yields? Have you heard much?
Yeah. And again, that talk was probably more back in August. There were a few fields that seemed to be dying prematurely, and I think it was, it's almost an annual event, I guess. We kind of hear about sudden death showing up here or there. From what we've seen, you would be hard pressed to find a disappointing bean yield so far. So it's evidently not showing up in at the end of the combining when they're finishing up a field. So it's some of the even in the Dakotas we've heard some yields on very early beans in the low 40s.
Okay.
And it has to be a real early bean to get them harvested this early.
Yeah.
And again, we've seen verifiable yields of in excess of 100 bushel the acre in central southern Illinois. So it's just a phenomenal crop, it looks like.
That being said, there's probably more downside risk in that bean market, wouldn't you think?
I would suspect so. And again, when you look at South America, now granted that's always there's the caveat there. South America does have an issue getting into the field, and of course Brazil's a large country. Southern Brazil has been a little bit wet. Central Brazil has been dry. So, not exactly perfect conditions, but planting is slowly begin to start down there. But for all intents and purposes, it looks like they will increase acreage, Brazil and Argentina both. But when you add it all up, it's just hard to look for a bright picture or a bright point anywhere in the bean market right now. So as it stands, it looks like we've got some lower lows ahead of us.
All right. Well, let's jump into the livestock market. Let's take a look at that fat cattle holding relatively steady, down about 50 cents on the week. Have we reached a kind of a stability point in this market?
Well, of course, we've thought that many times so far this year. So it's difficult to say. Again, when you look at the numbers on what's being held back as far as heifer retention, this type of thing, yes, we appear to have started the rebuilding phase, but boy, it's going to be such a slow process. The demand, I think there's the shocker is we have just not seen the demand slow down. So it's now granted we're past the barbecue season, that tends to slow things up a little bit. So that could take the edge off of the upside there right now. But it's but on the same token, it's just I think this cattle market has astounded us time and time again. Yes, I'd like to think we're probably in that final phase. This is kind of the blow off top, but boy, like I say, it's trapped many a bear this year already to try to believe that. So.
That's true. And as we take a look at the feeder cattle market, same story, down $1.77, close to touched limit down on Friday, I believe, at times. But probably still a lot of strength there as you look at those heifers being retained.
Yeah, well, absolutely. And again, it really kind of compounds the problem as we see some of those retained out there. So and again, when you've got the feed grain side of it continuing to move to lower lows, I mean, that has excited those feeder. And I think feeder cattle, of course, went to new record highs again this week before they did break. So again, when you get into a move that has really accelerated here recently, yes, you tend to think, well, we're at that final phase, but boy, we're going to need a little more confirmation to say that with a lot of confidence. So
now, that being said, at these price levels, do you go ahead if you're looking to hedge and sell the futures directly, or do you put in place an option play?
I guess my two favorite plays on doing that are either the options. The options are most certainly the simplest. A little higher risk way is to give them a little room, and of course you have the potential of always being hit in when when the market doesn't necessarily follow through. But just put a stop underneath. I mean, keep a stop under the previous week's lows. If the market keeps moving up, you continue to raise your stop. If you're never hit, well, fine. You would just continue to market at a higher price. If it does turn down and hit you, well, you've also locked in some exceptionally profitable levels as well. So,
all right. Yeah. Well, Dan, before we let you go, can you give us your best 30 seconds on the hog market? Up a little bit this week.
The hog market has really been struggling. I think it looks a little bit top heavy. The hog and pig report, of course, at the end of September really showed 4% increase for the last quarter, 4% increase forecast on the farrowing numbers. You have to believe the bloom is off the rose there. Again, not that we're going to change it around dramatically. There's still questions. I mean, there is no cure for PED. I mean, there is a vaccine that's been approved, but we don't know what the effectiveness is. It really didn't, of course, seem to affect us, of course, late in the summer, but there's no, the winter months is where the danger is.
That's where we'll see it.
Right.
Well, thank you, Dan, for your time this week. Really appreciate it.
Well, certainly. Thanks for having me.
And thanks to all and that wraps up this edition of Market to Market, but we will continue our discussion and answer some of your questions in our Market Plus segment online. You'll also find audio podcasts and streaming video of our program, as well as links to our Twitter feed, Facebook page, and the rest of our social media outlets exclusively at the Market to Market website. And be sure to join us next week when we'll examine the life and legacy of a Nobel Prize winner from the Corn Belt who is credited with saving more than 1 billion people from starvation. Until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com.